Hello and welcome to Watson's Weekly. This is a quick roundup of what I think are the most important and interesting economic and commercial events of the week just gone. On the macroeconomic side of things, Turkey released the American pastor Andrew Brunson after detaining him for 2 years and sent him home. This is likely to have a major effect on the Turkish economy, which had been put under increasing pressure by US sanctions put in place to force a release. Presumably those sanctions will be lifted and Turkey will be able to heave a huge sigh of relief. This may have a positive effect on other emerging markets, but I would have thought that this would be short-lived as this whole Brunson thing is Turkey specific. Italy had a spat earlier this week with the EU as it handed in its budget proposals. Now the EU is unlikely to approve of it in its current form as it will widen the current budget deficit, and the EU won't like that. This is going to be a tricky one to negotiate because other EU members won't want Italy to get a free pass, and Italy will kick up a stink if it is forced to kowtow to Brussels. Having said that, EU leaders won't want Italy to turn into a bigger and worse version of Greece, so there's a lot of negotiation to do. Markets had a tough week this week with almost all major indices going south on a combination of an overheated tech sector, trade war tensions, rising inflation and the prospect of 5 more US interest rate rises. Elsewhere this week we saw the release of some new tech gadgetry contrasting fortunes amongst British bakers and a lot of ups and downs for retailers. So in terms of gadgets, Facebook and Google released devices that have screens and smart speakers designed to help us communicate better with our friends and family. Facebook's device has a clever camera and Google's doesn't. This means that punters may prefer Google's device for privacy purposes, although that may prove to be somewhat ironic as the company admitted a massive data breach this week and shut down Google Plus as a result, although it was pretty useless anyway. As one Twitter user pointed out, literally tens of users of Google Plus were outraged by the shutdown. There was drama this week in the real Great British Bake Off, with Greggs unveiling some solid numbers on the one hand and upmarket pastry chain Patisserie Valerie getting its shares suspended on the other, amidst allegations of financial irregularities. Patisserie Valerie's CFO was suspended and then arrested, and the future of the company's 2,500 staff and 206 shops is looking pretty shaky. Retailers had another eventful week this week as American retailer Sears edged closer to bankruptcy, French Connection put itself up for sale, and Coast was rescued at the last minute by sister company Karen Millen. On a more positive note, TK Maxx had some strong figures, proving that there is life in the UK high street still. I hope you found this roundup interesting. I publish a daily note on watsonsdaily.com which gives you more detail on what I've just said on a daily basis. If you want access to this as well as my weekly, monthly and annual publications that will help to turbo boost your commercial awareness, don't be shy, please subscribe. A subscription will cost you less than a double espresso per month. Thanks for watching. Watson, out.